Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they close on the 12th of October 2018. Of course, a very interesting week, at least for the S&P 500 E-mini futures market. We had a major correction here into the uptrend, where we had a major period of selling last week come in. If you recall our analysis for this market from the week prior, we'd been talking about the importance of the 2875 level here. Of course, we had major resistance coming to the market at this point earlier in the year, and then we had indications of support at this level as well. In fact, in the more recent past, just prior week actually, we also saw candlestick wicks here touching the level, suggesting that the buyers here were trying to gain control. And just looking at the technical information that we have here in terms of candlestick formations and market action in general, we believed that the 2875 would possibly hold as support and allow for the market to continue to tick higher towards newer all-time highs and possibly closer towards our midterm target for this market, which is of course the 3,000 big round number. Well, none of that really panned out last week. As you can see, the market really didn't hold at the 2875 level at all, and actually just pushed rapidly through all the way down to pretty much test the 2700. The support and resistance area in general here just above the 2700 level. Of course, you can see there were indications in the past of the market sort of holding up at this level. And that's precisely where the market bounced late on Thursday and just continued to build some upside momentum going into Friday. So interestingly, even though we have a very major sort of a correction into the uptrend here, we're noticing a couple of things here. The first being, of course, the fact the market has bounced off just above the 2700 level off the support and resistance level. We're also noticing the fact that this entire move towards the downside was, of course, a very rapid one, and is in a lot of ways reminiscent and similar to the market movements that we saw, say, in March this year, and of course way earlier in February as well, where the market plummeted hard and then the market was really able to recover. And once again, the buyers were able to dominate and allow for the market to just continue to tickle higher, which also makes sense given the fact that, of course, the American economy, which is a direct reflection of this market, or we should say this market is a direct reflection of the U.S. economy. And since the U.S. economy just continues to do good, there's really no indication or no reason for us to believe that this market could be headed towards an extended bear run per se. Of course, that doesn't mean that corrections like the one we saw last week here can be ruled off either. Being in a volatile condition just at large, with the overall macroeconomic uncertainty, with relationships with China, some of the other major economic powerhouses besides the U.S., of course, and just all of the uncertainty around interest rate hikes or impending interest rate hikes, and the possibility or the concern among investors that the U.S. economy may not be able to hold its strength for long, are really all the concerns that just fed into the price action here last week and allowed for the market to drop as hard as it did. But over the long haul, we're still not very confident that this entire move here could be the stepping stone towards an extended bear run for this market. We're still very hopeful that the buyers here should be able to continue to dominate and allow for the market in the near future to again start climbing up. Of course, the first hurdle now will once again be the 2875 level here, being a very important level. There are other levels in here as well that could be of very significant. That could be very significant, including this level over here, just underneath the 2800 or at the 2800 level, and then of course the 2875-ish area that the market will need to basically break past once again for the uptrend to resume and for the market to continue to move towards a point where it can start making new all-time highs and possibly move towards the 3,000 big round number, which we continue to see as a target for this market. We already see the foundations for it, so we're not very concerned about that possibly not panning out at all. We are seeing the market sort of bounce just above the 2700 level here, and of course Just the fact that the market accelerated so hard towards the downside, it makes us believe that the market may potentially not be able to hold all that momentum towards the downside. And as we've seen on multiple occasions in the past where the market has dropped very hard in a short period of time, it has for the most part been able to recover in the coming trading sessions and just allow for the market to continue to go up. So as long as the US economy really just continues to show strength, we are not really concerned of an extended bear run for this market. And if anything, we just feel that this could be a good entry point for a lot of traders looking to go long on this market. Although once again, just given the fact that the volatility here appears to be a lot higher than the last few weeks when the market was actually trending up a lot more smoothly, we wouldn't really put this down as an actual trade call. We would of course ask of our investors to be very, very diligent and cautious in taking trades in a volatile market. But just in terms of our overall directional bias for this market, we still think that this is a bull market, and we still think that price for the S&P 500 E-mini futures market should continue to go up higher in the coming week and weeks to come. Okay, so the next market we're going to be looking at here is the light crude oil futures market, and this is a market that did behave pretty much as per our expectations. If you recall our analysis for this market from the prior week, we had been talking about the importance of course, the $1.74 and the $1.75 major round numbers that have in the past acted as very long-term support and resistance levels for this market. And we had talked about how the fact that the market had accelerated past this level over here and a sharp drop down once again towards the level was giving us indications that this could possibly be a fake break above the $1.74 price level. You can see that we did have a bullish pin bar here printed just at the $1.74 level, suggesting that the buyers did momentarily try to build some kind of momentum here towards the upside and allow for the market to continue higher. However, that really didn't pan out well at all, and the sellers were towards the actually within the second half of last week were able to dominate the market once again and allow price to trickle once again down underneath the $1.74 price level. And not just that, but also close very strongly underneath the level, which pretty much confirms this entire move above the $1.74 level here as a fake breakout. Of course, much of our belief and reasoning behind the possibility of the market making a move above the $1.74 level being a fake breakout scenario basically played out from our analysis and our belief in the $1.74 level here as a very long-term support and resistance level for this market. And so just a quick sharp move through the level and then back down really wasn't going to excite us much about the prospects of having to see the $1.74 level here hold as support and for the market to continue to post higher highs like in the more recent past. Of course, although we have been seeing major pullbacks into the market here, we have for the most part been seeing higher highs. Of course, this more recent high here is also higher than the one we made previously here at the $1.74 price level. So while that theme continues to be intact, we're still looking at more extended pullbacks into the at-large uptrend going on here. And all of this really just connects to our initial understanding and our viewpoint about this more recent price action for this market, which is that we see this market trying to round off and sort of cap out at the $1.74 to $1.75 price levels here that are of course very long-term support and resistance levels for this market. So this more recent fake out here that we had just above the $1.74 price level just pretty much further strengthens our belief that this market is for the most part just trying to consolidate and possibly tighten up within trend lines and areas of support and resistance here, and possibly consolidating and gathering the momentum that it needs for a more extended move towards the downside and for the market to basically cap out at the $1.74, $1.75 price level. So looking at the more shorter term, a more myopic view or a more short-term view of the market, you can see that we pretty much closed at this more short-term support and resistance level pretty much at the $1.71 price level, We've had multiple occasions in the more recent past where price found resistance at this level, and a strong close underneath this level over here suggests that if this level continues to hold as resistance now, the market could actually move further down, possibly test the $1.70 round number over here. And if that level allows for the market to just continue to move down, we may definitely have this more important long-term support trend line over here could definitely come into play, and it would then be very interesting for us to see if the market can actually either tighten up within this sort of a wedge pattern here now between this rising support trend line and these areas of resistance at the $1.74, $1.75, $1.76 price levels over here, or potentially even be able to see the market break underneath the rising support trend line, maybe use it, pull back to it as resistance, and just continue its way down, which is pretty much in line with what what our expectations are from this market over the more longer term. So just going into this week, our expectations once again would be to see the market continue to push lower, or for the most part just consolidate in a broad range over here as it just continues to consolidate and build momentum to break possibly towards the downside. Okay, so the next market we're going to be looking at here is the Euro currency futures market. Again, if you recall our analysis for this market from the prior week, we have been talking about how this market seems to be caught up at the 1.16 major round number in area of support and resistance that just continues to act as a pivot for this more recent sideways period of trading activity on this market. And that theme pretty much continued on to last week as well. As you can see, the market pretty much just oscillated up and down around the 1.16 major round number in support and resistance level. We have an initial candlestick here sort of poking underneath the level, and in the next few candlesticks we just have the market pretty much trade sideways for the most part, no real movement either up or down in either direction in a strong fashion. And then we once again had the market sort of move away from the 1.16 closer towards the end of last week, and on Friday once again just a small pullback back into that small move up. So there's really no momentum here at all, either from the bulls or the bears here in this case, and the market just continues to be for the most part just very persistent on staying within the vicinity of the 1.16 major round number here. So unless that situation changes and we see a more definitive move past the 1.16 level here, we really do not have much expectations, at least in terms of the market making a strong move either towards the upside or the downside. So we see just this consolidation continuing on here. We do not have any price action or technical indications at large to suggest that this consolidation period could possibly be gearing towards an end anytime soon. Of course, that could change going into this week if we do see the market actually making a strong move either underneath the 1.16 level or above the 1.16 level. That should definitely get us a lot more interested in possibly setting up any kind of targets, short-term or long-term, for this market. So a move like this, for example, where the market actually made genuine attempts to venture past the 1.16 level towards the upside, or a move like this where we definitely saw the market make a sharp, confident move underneath the 1.16 level. So unless we see any moves like these, we're not very confident about possibly seeing this market escape this current notorious sideways trading activity that it seems to be caught up in. Okay, so the next market we're going to be looking at here is the gold commodity futures market. This was a very interesting market to follow last week. For this market, we have been looking at a couple of areas of interest for us. First of all, we're looking at this dropping or descending resistance trend line over here, and this ascending support trend line sort of creating a wedge pattern over here. And just in line with the more longer term downtrend, we had been anticipating a potential break underneath the rising support trend line in the market to use it as resistance later on, to possibly continue on with the more longer term downtrend that we had in place in the market before the market began this more recent period of consolidation. We didn't really see that happen last week at all. as you can see, the market actually pushed towards the upside over here. The interesting thing about this sharp move towards the upside is that not only was the market able to close past this area of resistance, it also was able to close past this area of horizontal support and resistance, pretty much just above the $1,200 round number over here. As you can see, we've had multiple indications in the more recent past where price either found concrete support or later on resistance at this level. So a strong close above this level could spell volumes about how the market could potentially be looking to break past this level over here and possibly post a more extended move towards the upside. However, we're also noticing that a lot of buying here that came into the market last week could also have stemmed from the weakness in the S&P 500 market and generally the US equity sector. Because gold obviously being a safe haven investment option for investors, a lot of investors, when they're trying to move out of the more profitable, generally more profitable equity markets that may not be doing very well, prefer to invest in instruments like gold. So unless this is just a knee-jerk reaction from the weakness that we saw last week in the S&P 500 market, we could definitely be able to see a more extended move here towards the upside. On the flip side, if this is really just a knee-jerk reaction, as we said, we could definitely, in that case, see the market potentially moving back underneath this area of support and resistance, using it as resistance once again, and possibly pushing once again lower to test this rising support trend line, possibly even breaking it this time towards the downside, and basically just continuing with the move down and in line with our original expectations for this market. So a lot really depends on how the market basically unfolds in the first few trading sessions this week, and whether this level over here that we've drawn will be able to hold as support or not. So it'll be an interesting market to follow for sure for us going into this week. Okay, so the next market we're going to be looking at here is the 10-year Treasury Note futures market. Now this market posted a pullback as well over the prior week, but it still more or less seems to be in line with our longer term expectations from this market, which are definitely inclined more towards seeing a more extended move towards the downside. If you recall our analysis for this market the prior week, we had talked about how the fact that the market seemed to have broken strongly underneath this past swing low over here and period of support. Of course, in the more recent past too, we had an indication or an instance where the market bounced only temporarily off this prior swing low over here, and then the market was able to break underneath this level and close strongly below. And so this so far just continues to be in line with our expectations that the market should continue its way down. You can see that on Thursday and on Friday we didn't really see any attempts from the buyers here to try to really break past this level towards the upside, and just the market really just was able to hold at this level as resistance. However, we've not yet seen the market actually push right back down, so as to confirm that the level here definitely is holding as resistance. So we wouldn't be confident enough here to think that this pullback here towards this level, this horizontal support and resistance level, is definitely just going to be a very minor pullback, and the market will be able to spring back towards posting a more strong and dominant move towards the downside, as or rather in line with the more recent past. But that would just be our general expectations, given the fact that we're seeing the market sort of hold up at this level, and how the market seems to have only just broken past this more extended period of sideways trading activity that it was stuck in for quite a long period of time. So just going by all of these indications here, our expectation would be to continue to see lower price levels for the 10-year Treasury Note futures market. Of course, that could change if the level here that we've drawn, this area of support and resistance, if this level does not hold and the market's able to push actually past this level and close strongly above of it, we could actually see the market re-enter into this period of consolidation. But just looking at the more longer term downtrend over here for this market, and the fact that we've had a confident push underneath this this area of support over here, makes us believe that this market could actually be headed towards lower price levels in the week and weeks to come.